Hello, and welcome to this video on Statement of Change in Equity, Retained Earnings column. So in this video, we've just been looking at the Retained Earnings column. So the company we've got here is called Personalised Limited. It's got a balance of retained earnings of £125,000 at the 1st of January 2024, which is the beginning of its financial year. The company has made a profit from operations of £210,000 for the year ended the 31st December 2024, and the following payments have been made again during the year ended the 31st December 2024. So debenture interest is the first one. We got £14,500. Now we've got a final ordinary dividend for the year ended the 31st December 2023 of £25,000. Now that's been paid during the year ended the 31st December 2024, so that's important. An interim ordinary dividend for the half year ended the 30th of June 2024 of £20,000. Again, that's been paid during the year ended the 31st December 2024. We're told corporation tax to be paid for the year ended the 31st December 2024 is £55,000. Right, let's see what we've got to do. We've got to do two things. First of all, complete the income statement from the profit from operations of £210,000 for the year ended the 31st December 2024. And secondly, prepare the statement of change in equity for retained earnings for the year ended the 31st December 2024. So here's our income statement extract. It's going to be starting at profit from operations. We're going to have finance cost. Now remember, finance cost relates to interest. So in this question, it's going to be your debenture interest. We deduct that from the profit from operations, and we get profit before tax. Then we deduct the tax charge for the year, and we end up with profit for the year. So profit from operations then. I'll go back to the question. We are told the profit from operations, we said it in two places. We've got it in the initial question, £210,000 there, and also in the you are required to section here, £210,000. So let's put that in. So it's £210,000. Now the finance cost, as I said, we're looking for interest here, and we have debenture interest. So the debenture interest that was paid during the year was £14,500. So that's going to reduce our profit from operations. So £14,500. Let's just check that. That's the correct figure. Now the profit before tax is basically the £210,000 take away the £14,500 of finance costs. That gives us a profit before tax of £195,500. Now the tax figure is going to be the tax charge for the year. So corporation tax to be paid for the year ended the 31st December 2024 is £55,000. So again, that's going to reduce our profit. So take away £55,000. So the profit of the year then is going to be the £195,500, the profit before tax. There's a tax of £55,000 to give us £140,500. So that's an extract from the income statement. Now we're going to use that figure for profit of the year now, and when we do our statement of change on equity for the year ended the 31st December 2024. So again, all we're looking at today is the retained earnings figure. So we're going to start off with the balance at the beginning of the year. So the beginning of the year, on the 1st of January 2024, I'm looking for retained earnings. So go back to the question, retained earnings at the beginning of the year. Right at the beginning, Personalised Limited has a balance of retained earnings of £125,000 at the 1st of January 2024, the beginning of its financial year. So I'm going to put there £125,000. Now the profit for the year, we've just calculated that in our income statement extract, and that was £140,500. So that's going to increase our retained earnings, so we're going to add that figure on. Now we've got dividends paid. Now the dividends paid is the total dividends paid during the year. So go back to the information. We had a final ordinary dividend for the year ended the 31st December 2023 of £25,000. And again, also during the year, we had an interim ordinary dividend for the half year ended the 30th of June 2024 of £20,000. So we're going to combine both of those two together. So we've got the £25,000, then plus the £20,000. And that would give us a total of £45,000. So we're paying this as our profits, so it's going to reduce our retained earnings, so it's going to be minus £45,000. And then the balance at the 30th of December 2024, now just let me check that, that should be the balance at the 31st of December, so the 31st of December 2024 will be the £125,000 balance at the beginning of the year, plus the profit for the year of £140,500, minus the dividends paid of £45,000 to give us a balance at the end of the year of £220,500. So that's a brief summary of our statement of change in equity retained earnings column. I hope you enjoyed the video and thank you for listening and watching. Take care then. Goodbye.